let's take a look at the potential here for tops in the market. Could this market get back to an all-time high? And the big question here is, what type of top are we making in the market? Are we making a Bitcoin top where we made a higher high before the rollover on the S&P 500? Or are we going to do a top like the NASDAQ in 1999 to 2000 where it had a lower high? So again, that's something I'm paying very close attention to, right? Because to me, it doesn't matter. If we go and make a new high, it's just a double top until proven otherwise, just like on Bitcoin. And again, if we flip over to Bitcoin, what I mean by that, let's go over here to Bitcoin's chart. In fact, I think I have it up right here. There we go. I'm even going to erase that. But here's your Bitcoin chart, right? This was your top on Bitcoin. Up, down, up, higher high, okay? And then the down. And essentially, if you looked at the RSI, and I went over this last week in the videos, we saw negative divergences. Negative, negative, negative divergences. So here was your one type of cycle top occurs with an M top with a slightly higher high. The reason the high is higher, because it has to stop out the last few shorts on the breakup. So stops will be right at that double top here. It pushes just above so that those stops get taken out, and it convinces all the remaining bulls to go long, right? Or I shouldn't say bulls, any bears that were on the fence, it's going to push them to go long. That's how tops are made. Get everyone else into that zone to move up, okay? So ultimately, that's one sort of top that we have to pay attention to. That is a possibility for the S&P 500. It is. I don't think it's a likely probability or possibility, but it is a possibility. The other type could be something like on the NASDAQ chart here. And if we bring up the NASDAQ real quick here, we have this, and let me go to my weekly chart. So essentially, this is your NASDAQ chart, and I'm going to go all the way back. Bear with me here. Got to go all the way back. In fact, all right. So basically what we have here is the NASDAQ, and the NASDAQ chart, if you look at this 2000 period, and again, it might be a little bit tight to look at. I'll see if I can zoom in a little bit on this period here. There we go. All right, so let me just try to drag it out a little bit here again so we can get that a little bit bigger. There we go. So basically what we have here is this insane move. And by the way, does this not look like the COVID drop before the vertical move that we experienced? Like, look at that right there. Then you have the big fall, the retrace, and then the big fall. So this is the second sort of cycle high. This is what the NASDAQ and the S&P look like right now, but you could always see it move back to the upside. Now, if we go to the current cycle, let's take a look at the current chart of the NASDAQ. If we zoom all the way forward here, there it is, right? So here, essentially, you have much the same, where here was your COVID drop, then the vertical move, and then this retrace right here. And so the question I have is, are we going to go to double top and pierce it like Bitcoin and like some other cycles, which creates an M top, or are we going to do what we did in 2000 and go like that? And so those are your two scenarios. I would rank that this scenario is probably the more likely one, but you can't discount the chance that we could pull a Bitcoin high pivot top as well. All right, so again, I like to show that because this is the thing. As a technician, as a chart trader, again, I might think it's this one, but that means that maybe there's a 70% chance it's this one, or even a 60%. Still means there's 30 to 40% chance that it goes up here. And again, the reason why it's important to recognize that there's no perfect answer to a trade, meaning there's no 100%, is because by recognizing that you can be wrong, you will actually make smaller investments to protect. And what I've started to do, like I've told you, I DCA in, right? I dollar cost average in on day trades, on swing trades, pretty much on anything, even long term. You guys know, eventually I'm going to build a HODL position in Bitcoin, but I'm not going to buy everything right here. I'm going to do a little here, little here, little here, little here, little here. As low as it goes, dollar cost average in. That's a way to mitigate your risk that you're wrong on one particular entry. Because again, I've traded for 24 months, and in general, I'm still wrong a ton of times. Now, I'm right more than 50% of the time, generally 70%, but that's on the net trade at the end of it. If you look at my first entry on trades, I'm probably 50%. And so if you think about it, 50% here, and then you buy here, and you buy here, and at that point, the dollar cost averaging, you're at 70%, And then even if you have to do a little bit more, eventually you get that move to the upside, and that's how you have that longer, better winning streak or profits in your pocket.